Hello everyone, welcome to my YouTube channel. From this particular video, we'll start a new component in income from salary. So sometimes what happened in a company, they will give certain amount of leaves for one whole year. So the employee can take certain leaves that is known as paid leaves. Means even if they take the leave, they will get the salary on that particular day. So some employees, what happens? They will not take the complete leaves. All the leaves, they will not utilize it. So what happens? At the time they leave the organization or at the time they get retired from the organization, those leaves can be encashed. Means whatever the leaves they have saved, okay, they have not used, they will get certain amount for that. So that is known as leave encashment, we will call. In our IT terms, we'll call it as earned leave. So for this particular leaves, whatever you have not utilized, okay, you will encash that leaves, means you will get the cash for that leaves. So that is known as leave salary. So sometimes what happened, this unutilized leaves, some leaves if you have not utilized, you can utilize in the following year. Suppose this year I have not taken the leaves, next year I can take the leaves, okay, or else the amount will be can be taken at the time of retirement. So this is what the introduction about the leave salary. So how do we do the tax treatment of leave salary? This table is very, very important. This table will help you to remember the concept very easily. Suppose in service, sometimes you can encash the leave when you're in service only. When you encash the leave when you are in service, suppose if you're a government employee or not in government employee, both the cases, the complete amount will be taxable. You will be not having any kind of exemption. Complete amount will be taxable. Whether you are a government employee or not a government employee, the complete amount will be taxable. Suppose during the retirement, after you get the retirement, if you encash these leaves, suppose you are a government employee, it is fully exempted. You need not pay a single rupee tax on that. If you are a non-government employee, it is taxable, but there are certain exemptions that you can avail. So in this particular chapter, salary chapter, we will be solving only for non-government employees, that too at the time of retirement. So this is the format to compute the leave salary at the time of retirement for non-government employee. When you are a non-government employee, after time of your retirement, you are taking the leave salary, you are encashing your leaves. So for that, how to compute the taxable earned leave with the help of this particular formula. So in that, first we will take actual earned leave received. So what is the actual amount you have received, that we will write in the outer column. Next, least of the following will be exempted. So least of the following, there are total 4 exemptions. Out of these 4, which is the least amount, which is a less amount, that will be given as exemption. First one is actual earned leave received. What is the actual earned leave that you have received? That will be the first exemption. Second exemption is maximum amount of 3 lakh rupees. Maximum you can take exemption up to 3 lakh rupees. Third one is 10 months into average salary. We have to find out the average salary. From that average salary, we have to convert it for, or we have to calculate that particular average salary for 10 months, and that we have to write. That is the third exemption. Fourth exemption is approved period into average salary. So we will find out the average salary for that approved period. What is that approved period? You will get to know once we are solving the problem. You will get to know what is that approved period. Approved period is nothing but the balance leaves. So balance leaves into average salary. That we will do it here. So least of the following, in this 4 amount, whichever is lesser, least of the following will be exempted. That will be given as exemption. Remaining amount, whatever the remaining amount is there, that is known as taxable earned leave, or in short, taxable EL. So with the help of this format, we will be solving the problems. There are some additional notes. So 10 months, how we will calculate means the month which he has retired. Previous to that 10 months, we will consider for average salary. That is average salary. So salary includes basic pay, DNS pay, DNS allowance, which is forming the part of salary or which enters into retirement benefits, plus fixed percentage of commission on turnover. So if any commission is given on turnover, that will also be considered for the purpose of calculating salary. Next, for the purpose of calculating average salary, the formula is total salary for 10 months that will be divided by 10 months. Whatever the total salary is there for 10 months, that we will be dividing it by 10 months. So then we'll get the average salary. Next, suppose sometimes what happens, an employee will be working with two different organizations with two different employers. Anyway, let be the number of employers he work, only the maximum limit is 3 lakh. So he may work with two employers, he may work with three employers, but maximum he can avail the exemption up to 3 lakh rupees only. That is the maximum limit given by the government. Next, according to IT rules, in a year, means in a complete 1 year of service, he can get 30 days EL. So if one completed year, so complete year, if he works for 1 year, then he is entitled to take only 30 days as earned leave. Some organizations in question, they will give that the earned leave is 45 days. Let them give any number of days, but according to the IT rules, we will consider 30 days only. So this we will take into the consideration of approved period. While calculating approved period, this is very much necessary. So in simple terms, for 1 year, for one completed year equals 1 month of EL. So 1 month is 30 days, isn't it? So if employee has completed 1 year, if he has completed 1 year in the organization, we will take consider that he has the eligibility to take 1 month of earned leave. So that is what is all about the according to IT rules, what is the prescribed earned leave. So this was all about the theory part. Please remember this format very well. From next video, we'll start solving the problems. So meet you in the next video.